Okay, folks, welcome to a Sunday night. Okay, folks, welcome to a quick Sunday night update. Happy Mother's Day to all you ladies out there. It seems like only yesterday, it was last Sunday, we were talking about the markets that were really getting crushed, and here we are again. So what we're going to do tonight is we're going to talk about the activity going on in the markets right now, what catalysts are causing the weakness in the overall markets, and what unforeseen reason is out there that just may well send the gold miners and gold much, much higher. So let's get to it. Actually, before we do, a note to our sponsors. This video is sponsored by Trent Spyder, the next generation in automated technical analysis. If you don't have time to do the analysis, let Trent Spyder do it for you. Click of a button, support and resistance lines come up on your chart. If you're looking at a daily chart, you want to see where support and resistance levels are on a daily chart, simply click a button and you'll get a weekly overlay of support and resistance levels on your daily chart. It's the hottest stuff going on right now. The institutions are using it. It's affordable now for you. You get a 25% discount code, CT25Z. Take advantage of it. Click the link if you watch this on YouTube below in the video description area. Click the link above. If you're watching this on the blog, it'll take you over to Trend Spyder, and it's also included with our silver and gold level member packages. So you don't have to pay a dime. It's included. Just join up for the 14-day free trial offer to the Contrarian Trader, and you get a 7-day free trial offer when you buy Trend Spyder as a standalone item. Let's get to it. Okay, so last Sunday, we got together and we talked about the weakness in the markets, and here's what I had to say that was my major concern moving forward about the headlines that were coming out. It wasn't the increase from 10 to 25% on existing tariffs. That didn't bother me all that much. We knew that was coming, but here's what I had to say last Sunday. Okay, folks, welcome to a quick Sunday night update. We see the futures are under pressure this evening. Look no further than the headlines that are on Zero Hedge, I'm sure, across the financial news. Trade deal dead. Trump says 10% tariff on China, rising to 25% on Friday. That's big news, but it's not really the biggest news. The biggest news is this: another $325 billion in goods to be taxed. So what's the problem here getting a trade deal with the Chinese? The problem is that the Chinese, they believe they have their right to intellectual property theft, and we inconveniently say no. So it looks as though President Trump is going to go to the mattresses on this one, and rightly so. All right, so that's what I had to say last Sunday about my concerns moving forward into the new trading week and weeks, is that we were going to get new tariffs on another $300 to $325 billion worth of goods. The jump from 10% to 25% didn't bother me. Kind of knew that was coming. No big deal. The Chinese are not going to let go of their intellectual property theft, which they believe to be their right. So this is only going to get worse, folks. It's really only going to get worse. So this weekend's headline: Trump pulls the trigger, begins process of raising tariffs on all remaining 300 billion Chinese imports. There you have it. He shot the bazooka. So of course, you get the fake news outlets out there, such as CNBC. And of course, what they're doing is they're now priming the pump to make this a weapon against President Trump in the election cycle. And they're saying that this is going to cost the average consumer about $800 per household. Now, let's put out a qualifier there. Are they right that tariffs are paid by the U.S. consumer? Yes. Will it be $800? Who knows? A lot of those goods currently made in China can be made elsewhere at a lesser price. So in the end, will the U.S. consumer have to pay more? Maybe not. Might the consumer, if they have to pay more, decide, you know what, I don't want it? Yeah, so it won't cost the consumer anything. It's about time the U.S. consumer started tightening up a bit. So you're going to hear a lot of propaganda, a ton of it. Yes, a tariff is a tax on the U.S. consumer, but only if they're forced to pay it. All right, so let's get to the charts. All right, let's kick things off with a chart of the E-mini futures. We are down about 0.75 percentage point at current. Now, this chart doesn't look that bad. It would look a lot worse had we not surged late Friday afternoon. We have gap down. Let's go to a 1 hour chart. We have gap down. We are off the lows of the session. This is not a pretty setup. Now, what I'd be looking for here on whether it be the NASDAQ, whether it be the S&P 500, whatever, I'll be looking for a break below last week's low. So what I want to do is I want to take my crayon out and I want to connect this support level here. It's drawn a nice pretty red. Okay. So there we have it. I really don't care how we open up tomorrow. It's probably going to be an ugly morning. What I really care about is whether or not we take out the lows of last week. If we take out the lows of last week, we're coming down here to 28.22 on the S&P 500. It's going to be a painful week if we break. Now, taking a look at the NASDAQ, we are down nearly a percentage point on the session. We have not taken out the lows of last week. So much as what we did with the S&P 500, we want to identify where we have critical support below. Because if we begin to take out last week's lows, major warning flag on the track. You're going to see shorts, algos lean into the short side in this market. You're going to see institutional distribution. And we'll probably head down here on the NASDAQ to 72.95 on the NASDAQ. So a pretty stiff drop before all this is said and done. I'm not saying it's going to happen in one day, but it's going to be a ruthless sell-off here. Now, I want to talk about Bitcoin. We've been talking a lot about Bitcoin. In fact, on Friday, I raised my price target on Bitcoin, and here's what I had to say. Bitcoin, 4-hour basis. We were talking about this earlier this morning. I said, you know what? We're probably going to get a pullback here and a retest. We were using Trent Spyder and we identified a support level. What happened? We bounced off of that support level. Now we are making new daily highs on Bitcoin. And I'm telling you right now, I'm raising my price target on Bitcoin to 65 to 6,600. That's the range. Members will be doing a deep dive on Bitcoin tomorrow on the week ahead commentary. So stay tuned. That goes out to members. So Bitcoin looking outstanding right now. Really strong, really good stuff. Let's bring up, so you could see that we not only met our objective, our price target, but we have exceeded it. Now, we're long of Bitcoin. We're up about 55% on Bitcoin right now. So I plan on holding it, and I'm not raising my price target right now because honestly, I think what is probably going to happen here is that we will probably fade and pull back. I mean, at current, what we're doing right now on, these are 3 standard deviation Bollinger Bands. What we're doing here on the Bollingers is that we are trading above the 3rd standard deviation Bollinger Band. So were I a short-term trader right now, I'd look to book my profits. And I think that what we're doing is we're going to come back down over the course of the next several days, and we're probably going to retest this support level. So it's going to be either one, perhaps two of these 2 support levels. On a extreme pullback, this horizontal support level at 66.42. But what may act as support is at current, what was the upper band of resistance may now act as the lower band of support for Bitcoin, and it is rising. So if things get really ugly with this trade war and we get a retaliation out of the Chinese, that may just keep a bid under Bitcoin. So we'll be looking for a pullback because this is unsustainable, this trading above the 3rd standard deviation Bollinger Band. We're either going to trade sideways or we're going to pull back. One of the two. It's going to happen in very short order too. It's not going to stay above this Bollinger Band. This is a 3rd standard deviation Bollinger Band. As I teach members, we are not supposed to be there. It doesn't mean that Bitcoin's going to crash. It means that it's going to come in a little bit. Either trade sideways, thus alleviating that overbought condition, or it's going to pull back some. And on RSI 4-hour basis, we have RSI at 85. It's a cryptocurrency, very volatile. It can go higher, perhaps even up to 90. So I wouldn't be the least bit surprised. But we're going to get a pullback here in short order on Bitcoin. I would not go chasing Bitcoin. I have not raised my price target yet. I will. Follow me on YouTube. Sign up for the 14-day free trial offer. It's free. And you'll know when I up my price target on Bitcoin. Let's take a look at the US dollar, which will lead us into a conversation with regard to gold. Now, what people aren't paying attention to out there is the fact that you have Nigel Farage. Most people have probably never heard of the guy. He's the founder of the UKIP party in Great Britain. Now, he was the staunch leading advocate of Brexit. He is now surging in the polls against the other major parties there, the Tories and the Labour Party, I believe it is. So leave a comment below if I don't have that right. But I think those are the two parties, Tories and the Labour Party. And he is surging in the polls. I don't know if he's ahead yet, but he's surging. So what that'll do is that while the negative news on China will keep a bid under the US dollar, the threat of Nigel Farage becoming the next prime minister of Great Britain will put a bid under gold and allow the dollar and gold to rally in tandem. You're not going to hear much about this, folks. Nobody wants to talk about Great Britain. It matters, though. Brexit matters. Everybody's going to want to talk about China, Bitcoin. Let's take a step back. The last time that gold and the US dollar rallied for weeks at a time in tandem was post-Brexit. That's when the referendum in Britain passed to leave the European Union and gold and the dollar surged out of fear. So I think what we could be setting up for here is a similar rally in dollar gold if Nigel Farage is elected. I'm making that call right now. So the dollar right now, it's trading slightly down, but I'll tell you, on Friday it had a good day in that on this 4-hour chart, it was able to recapture the support level. We are holding on to it. We're not seeing a drastic sell-off in the US dollar, and typically the dollar does well when there is negative news coming out of the China-US trade deals. That's just the way it is. And when there's good news, the dollar sells off. So when you take a look at the dollar, which is holding firm right now, and you want to take a look at, okay, let's see how the price of gold is doing. Gold is up. It was up higher a little bit earlier, but it's holding its own. It was up last week. So what I'm looking for here is a breakout on gold, and you're not finding many bulls out there on gold. Listen, folks, a lot of people are thinking short term with regard to this market. And when people ask me why I am bullish on gold, silver, the gold miners, cryptocurrency, I'll give you 22 trillion reasons in rising why you should be bullish on gold, silver, cryptocurrencies, etc., because it's an alternative to the US dollar. Because at some point in time, the Chinese are going to pull the trigger and they're going to allow these short-term bonds that they own to just expire and not renew. What's that going to do to yields here in the United States? The gig will be up. And that'll cause the Federal Reserve to have to go back to QE. And that is what President Trump wants right now, is for Jerome Powell, the Fed chair, to begin thinking about cutting rates right now. And you're going to hear more about that buzz this coming week and the following weeks, because the markets are going to sense fear. There's going to be a clamor to cut yields in advance of retaliation by the Chinese. It's coming. It's sure as God made green little apples. And once they do that, you're going to see the dollar go like this, and you're going to see gold go like this. That's just the way it is. So gold looking okay. And taking a look at silver right now, 4-hour chart, you could see that we're trading down lower highs, but we've stopped putting in lower lows. And we are toying with a breakout here. I think that it's quite possible. You can already see I have my alert set here. I think it's quite possible that we break out on silver this coming week. Before we sign off here, let's take one last look at the S&P futures. They're still weak. Folks, sometimes the best thing to do is nothing, right? It's probably going to be a weak opening tomorrow morning, but But as I said last Sunday when we had similar price action on the S&P 500, I said, don't go trying to chase this market to the short side tomorrow morning. And sure enough, we reversed. At one point, we were almost positive on the day. So just be careful here. Let's wait for support levels to get closed above or for resistance levels to get broken before we make any serious decisions here. Sometimes the best action is inaction. So please, let's pull back a little bit. And on that note, folks, if you're not currently a member of the Contrarian Trader, please sign up for your 14-day free trial offer. Trent Spyder, the next generation in automated technical analysis, is included in our silver and gold member levels. You also get, in the gold level member package, you also get Trading Sim. That is your back testing of your trade strategies. You do it 24 hours a day, 7 days a week, risk-free. You start off with a $160,000 practice account. This is the way you should be doing business. You minimize your risk, you maximize your reward, and test out your strategies. Everybody have a great night. I'll talk to you tomorrow. Be well. And happy Mother's Day.